Now, SEBI, the Securities and Exchanges Board of India, is our markets regulator, and its chief, Madhabi Puri Buch, if you recall, had warned in March of froth building up in the small and mid-cap stocks. The comments led to this bloodbath in the small caps and the mid-cap indices, and they turned a rather dark red. But today, the SEBI chief has justified India's expensive valuations and sounded rather optimistic, saying it's because of the world's faith in the Indian growth story. Listen to this.
Why is it that our markets are commanding? And this is, I think, an achievement for each person in this room, because you are the ones who are commanding this price to earning multiple, which is higher than not only the averages of the world indices, but you can see there the comparison with various nations. So at 22.2, yes, some people say we are an expensive market, but still, why is the investment coming? Because this is a reflection of the optimism and the trust and faith that the world has in India today, that we are commanding these kind of multiples in our markets.
So that's a word that we got from the SEBI chief today. But of course, what was the market condition like? The Nifty today created yet another record high on the first day of FY25. Although a tad flat today, let's find out more about today's markets and the kind of action that we saw unfold. Anisha, my colleague, joining us to walk us through the trading session as we saw it today. Anisha, what did we go home with?
Well, it was a subdued trading session for the Indian markets. Yes, there was a bit of a recovery in the last half an hour or so, and that's why we pretty much made up for all the losses that we saw throughout the trading session. But still, it was overall a subdued day for the Indian markets, but not so subdued if you're looking at the broader markets, because the mid-cap and the small-cap indices managed to outperform yet again. The advanced decline ratio was quite comfortable, and after that 3% plus kind of move on small-cap index yesterday, there were further gains that we saw on that index today. But it was a lot stock specific also today, so there are a bunch of buzzers, starting with the Aditya Birla Group companies.
Anisha, and of course, now the outlook for the Indian stock markets is something that we are looking towards. FY25, how is it going to be for our equity investments? To decode that, Mahantesh Sabarad, independent market expert, joining us on India Tonight. Mahantesh, good to have you with us. Now, at the start of the new financial year, I want to ask you what you think of the valuations in the Indian equities.
SEBI chief has said that the valuations are not too expensive when there is optimism. Let me also say that this is also bears out the fact that Indian markets are growing all the time. When I say the markets are growing, there is an underlying growth in the earnings momentum that many of the companies have, and there is also the sustainability factor. So two things essentially drive the market valuation, like I said before: earnings momentum and sustainability factor. Earnings momentum comes from the companies doing a lot more stuff which they didn't do earlier. It could be in the form of innovation, it could be in the form of better services, it could be in the form of cost optimization. And then you have sustainability. Sustainability comes from the fact that India is one large market that is sustainably growing all the time now. Perhaps the growth will remain sustained for more than a decade or so. If that being the case, naturally, a lot of money which comes in the form of equity capital will flow into the markets. So I'm not surprised by this premiumness that the Indian market typically commands. It's been the story actually for quite some time now in the markets. I would put it that Indian markets have been a tad bit expensive relative to the world, or as the SEBI chair has put, in terms of valuation multiple commands a premium. This has been the case for the last 15 or so years, I would say.
You're saying the premium that the Indian markets command, they are justified, like the SEBI chair has pointed out as well. Then what about the froth, the indication towards froth, especially in the broader markets? Have we left that behind, or is it still there? And finding opportunities, finding value, maybe a tad tougher in the immediate future?
I think let's decode what the SEBI chair had said in the past. One was an obvious reference to the SME listings, where there was a lot of froth. It's not the main board listing. Now, And then you have a lot of SME stocks getting into the main board, also getting listed into the main board in due course. So that froth was actually coming in from the SME board or SME listing board. So that's one. The second aspect of the froth is that unlike, let's say, a decade back or 15 years back, there are wider choices of stocks and sectors available to the market. 15 years ago, you would barely see 500, 600 stocks that were liquid enough for markets to bear. Now the number is more like 1,000 to 1,500 in that range. If that being the case, what typically happens is that the froth exits beyond those 1,000 stocks, well into the ones which are between the 2000 plus type of territory. So the froth has been simply present because the huge number of stocks that are made available in the markets nowadays versus what used to be available in the past. So you will have these temporary valuation mismatches in stocks which command low liquidities.
They cause a huge kind of shock to the market is the question. If the valuations are stretched, the levels that you're indicating, you're suggesting that it may not be such a huge shock that the markets can't bear. But we're already for one in the month when the huge electoral process begins, Mahantesh. Is this the time to be cautious, or is this the time to figure out how some pockets in the markets, like PSUs, for example, could rise post-elections and then position investments accordingly?
So, this is like taking a call on an event which we right now don't know where it is likely to head to. So playing an event is like a toss of a coin. That said, let's remember that the policy situation in our country is such that it is not one single person or one single institution that determines the policies of our country. It's a collective decision. Take GST, for example. While the finance minister may express views and opinions about where the rate should be, how the slabs need to be corrected, the decision finally comes from the GST Council, which is an equal representation from the states as well. So you now have policies determined by a collective mechanism, which means that even as we go ahead, irrespective of what the election results are going to be, we're going to see probably a stability in policy matters, particularly those policy matters which are commercial in nature, which directly affect a company's or profitability. So these commercial decisions will be are on a steady path. There could be other policy initiatives and decisions that come with the formation of the that rules the government. So having said that, I'm saying that the commercial aspect of the policy decisions are quite stable. So
Right.
you are not likely to see any correction thereof.
Also, Mahantesh, you look at the growth of the equity markets going by the action and the quality of opportunities that come up in the primary markets. Last fiscal, we've had a stellar run when it came to IPOs. How does FY25 look to you? And extrapolating from the kind of run we had last year, how do you think this fiscal is going to pan out for the IPOs that are set to descend upon us?
Quite frankly, the IPO market is an unequal market. Okay, you have retail investors on one side who, for them, this is a game of chance. It's a lottery. And then you have the institutions on the other side where it's a game of how big you are, the bully factor there. So I'm not too, sanguine about the IPO prospects ahead, simply because it's an unequal market. But once a company is listed, once there is a price discovery that has happened in a particular stock, and then it starts giving out history in terms of its earnings, you can pick quality stocks from the recent listings, from the recent IPOs. So investing in an IPO, quite frankly, is an unequal kind of path, unequal market, and there you don't necessarily find the price discovery which is true in nature.
Well, we'll see exactly how it goes for the IPOs and the rest of the equities, even the broader markets, the mid-caps and the small caps, where the SEBI chief had indicated some amount of froth building up. And the markets, of course, we saw that dark red patch emerge on the back of those statements. And today we are sounding very optimistic. Mahantesh, you too sound very sanguine about the Indian growth story and that it is going to deliver results in the long term. Great to have you with us and your perspective, Mahantesh. Thanks very much for speaking to us on India Tonight.